GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to another edition of the weekly webinar where we're covering some of the major asset classes available to trade. It's a lot of Forex, it's some commodities, it's some cryptocurrencies and it's some indices. And if there is anything else you'd like us to cover in these videos, if you've become a regular watcher, please just get in contact and we can make sure to include those in future videos. If you're enjoying the videos and get some benefit, it helps your trading week, then please click that like button, it really helps. So still interesting times in financial markets, not least in cryptocurrencies, which saw a massive boom and bust at the end of last week. I will cover that very shortly in terms of Bitcoin, but it's been happening in Ripple, Ethereum, some of these other markets too. Again, if there are things that you're looking to trade, we can always cover those in future webinars, but just to keep things concise, I've got these 8 that you can see on the screen right here. So let's start, as I normally do, with the euro-dollar currency pair. This chart has not changed a lot in a few weeks, but what is starting to change now is that we are just narrowly shy of the 120 level, and we actually, as of last week, sorry, just as of this morning, we've had our highest intraday close in several months. You know, we have to go back onto the weekly chart and look back to April of 2018 to find an intraday close as high as we have. And actually, you can see on the week, we've had our highest weekly close since April 2018. So over 2.5 year highs as far as weekly close, and that is a good sign for us breaking out to the top side here. So a lot of people get distracted looking at very short-term candlesticks. Of course, that's if you're going for 20 pips at a time, you know, you do need to be looking at a 1 hour candlestick, but it's good to pull back and just remind yourselves here, look, 119 has really been the level that we haven't been able to close above. And you can see on this weekly chart that we've been in this big long downtrend and we spiked higher this year, and we paused at 119 and we've just been going sideways. And you can see last week, look, we closed above 119. Now, we're still below that high from the summer, but on a weekly closing basis we are at the best we've been in 2.5 years, and that sets us up pretty well for a continuation of this weekly close breakout for more like intraday trending to the top side through 120. So this looks very bullish right now. Of course, nothing is for sure, and we could reverse at 120. It's a big round number. There could be a lot of orders up there forcing some more selling, but overall the picture looks quite good in my opinion. 116 has held as support, and we've broken up, and you can see several tests of this declining trend line, even on a very small little basis. Where have these black candles been? They've been from this long-term declining trend line that we've had in our chart for goodness knows how long. But we can see as of the last month and as of the last week, it's looking like we came up, tested the trend line, tried to trade above it, pulled back for 2 months rather, and now as of last month, as of this month of November, we are pushing out and seemingly making a move beyond this declining trend line, ushering in a potentially new bullish era. Even if that's not the case, it looks like we need to go up and test the old high at 125 if we get through this declining trend line. So potentially 500 pips above us of potential price action here at a minimum, if we are breaking out into a new upward trending environment on a long-term basis, on a multi-year basis. So that's where we stand with the euro. You know, in terms of short-term price action, 119 really the line in the sand at the moment. If we drop back through 119, then it doesn't mean that the bullish case is gone, but it just means that it's on hold for a little while. We've got some kind of vaguely reasonable trend lines that come in around 119. I suspect we don't even get there. It's more a matter of looking at 1950, and if 1950 doesn't give away, then you've got this old high through here. So you can see that previous peak here is at 119. Don't know why I'm doing that. There we go. 119.40 is that peak, and then if I move back to this little line that I was trying to draw in, that's just where we've got our midpoint there. At one, which is where big traders tend to put their traders on at these round numbers or semi-round numbers, 119, 119.50, 120, that kind of thing. So we're looking for 119.50 to hold for moves to the upside. If not, that previous peak down here. And then if we test 119, that's fine. It brings us back into contact with this rising trend line and the main support. And if we drop through there, well then on a short-term basis at least we probably want to hold off on the long trades. Let's move over to the pound. So we're drawing this rising wedge in one of the research team's daily research notes. If you read those, so you can see on a daily chart here we've got it through the highs, and we've been challenging the highs recently, and then just more recently the lows come up a bit steeper through here, and as of the last few days we've actually broken to the downside there. Not too surprising in that we're in the final day, we really are in the final days of Brexit now, 1 month to go to the end of the transition period, and so it's all to play for in terms of the British pound. Not a lot of uncertainty on display here, you've got to say. Up near 134, up near the multi-year highs, and it's tempting to think that even in a fairly adverse Brexit scenario, it still sort of feels like this 134 to 135 zone, this horizontal zone, feels very familiar to the downsloping trend line that we've seen in the euro. These are both pointing to breakouts in the major European currencies and a breakdown in the dollar. So let's see if those things actually come to fruition. So I didn't actually talk about the short term too much. If I pull back down to the short term, you can see that we've broken below this rising trend line, and so we're testing 132 as our first round number. I suspect 133 with these two peaks through here. This is quite significant. You can't know for sure if we will break through here, but if we do, I think it won't be too much of a tall order to get down to 132 and then quite possibly 131 as well. And if we drop below 130, I mean that really does feel like a shifting environment. That would be something pretty negative happening with Brexit. So for the moment, assumption is that some sort of deal can be scraped through, but the uncertainty in the meantime, we've still got a month to go. We could break down to some of these levels here above 130. Dollar yen, interesting. To be honest with you, I'm not even quite sure how to interpret this and what the best way to trade this is, but you can see quite clearly on this 4-hour chart a sell-off, and then bang, some very strong buying. Again, sell-off, bang, some very strong buying. Sell-off again, and then as of this current price action candlestick that you can see on the chart now, some strong buying coming in. Now, these are happening at progressively higher levels. I don't think there's a trend line to be drawn here, ish. It's a slightly weird one, doesn't really tell you about a trend. But these buying is coming in at slightly higher levels, so the buying seems to be getting a bit more aggressive. But equally the selling is coming in at slightly more aggressive levels as well. So if I were to guess, I mean, this seems like it's potentially the Bank of Japan coming in and intervening, maybe not directly, but at least verbally, communicating with banks, something along those lines. And it's just a matter of whether that succeeds or not to push the price higher. If we're looking at an extended period of dollar weakness, which the euro and the pound charts imply, then there's reason to think that that dollar weakness would extend to the yen as well, unless it's purely a safe haven thing, in which case the yen is a bigger safe haven than the dollar, and then actually dollar yen could rally. So, you know, not fantastic trending action. All I would say is that for the time being, overall, my bias is still just to kind of be on the short side while we're below this declining trend line. You know, have I thought on several occasions that we're going to break this trend line? Yes. Have we done so yet? No. So probably still just better to stay cautiously bearish. And you can see there's kind of matching highs along the RSI. So when we get above 57 to 58 on the RSI, and when we get below this on a daily basis, and if we get above this declining trend line, we can start to think about, well, maybe a range bound environment, or maybe a push into an uptrend. For the time being, I think better to stay cautiously bearish. Look where we sold off last time. It wasn't a very neat round number, but you can see it was 104.70, and it came through a kind of historical support from ways back when. So look to support, look to round numbers in support of ISDs to the short side until we see some material break above these lines we described. Right, let's have a look at the Aussie. I mean, this is fairly straightforward stuff. We've just banged straight into that I think August peak in the Aussie, and we're just pulling off a tad from there. Nothing particularly material at this point, and you can see on my chart that I've basically drawn in. We're pulling back from around from the 74 level. So for me, it's just a matter of, well, what round number do we kind of pull back to before we actually take out this high? Because it looks to me like an uptrend. We're just seeing a natural pullback from an old high. You know, so once we break through that, it'll be a kind of multi-year high, similar to the euro, where we've been downtrending in Aussie dollar for a while, got the final sell-off in the pandemic, and then we've been rallying back. So we're up to multi-year highs if we get through there. So understandable there'll be a little profit taken at the old high. So assuming the trend continues, it's just a matter of, you know, where do we look to jump in again. We're fairly clear-cut resistance turned sort of wishy-washy support with the 4-hour moving average in there, which hasn't worked amazingly well of late, but might do if we're entering a new trending environment. So first look at these old highs, see if we can get a reversal there, then 73, and then 72. To me it feels like we probably shouldn't really go much below 72 if we are trying to be bullish here. Otherwise it's just, that's basically through the middle of the range, and from there you would think, well, probably more likely that we just test the bottom of the range. And so that would be obviously another interesting opportunity for our third test of these lows, but you know, I'd be surprised if we're able to get anything close to that. It looks to me like we're about ready to push out to the top side. Okay, let's switch over to commodities, and yeah, pretty devastating week for gold. Great opportunities to the short side. Again, we highlighted this breakdown when we were on this daily candlestick in the daily markets analysis emails, and you can see we come off quite heavily. And what are these fibs that are on the chart? Well, if I put up to the weekly candlestick chart, you can see that we've almost perfectly pulled back 50% from our peak in whatever that was it July? Early August. So we pulled back 50% of the early August peak, which actually neatly takes us to the 50-week moving average, which was exactly where we bounced when we did the pullback in March. So interesting setup here. Certainly wouldn't be surprised to see a bounce on these levels. We've sold off for 3 weeks in a row. Even if this is not the bottom, we could be in for a slightly more positive week here in gold. It's hard to, my rule, especially with any market, but especially with gold, is that it tends to rip higher than you think and dip lower than you think. It always goes a little bit further than you would imagine possible. And so we pull back to the 50% after 3 weeks of sell-off. That would be reasonable to me, but we held on to 1850 as support for a while, so the fact that it's given way, maybe there's still some more selling pressure to go. Another logical level below would be this kind of confluence of firstly resistance, then held as support, and is actually the 61.8% pullback as well, and that comes in more like 1685. So that's a level to look out for if we extend a little bit further to the downside from where we currently stand. But old resistance, 50% pullback, moving average, which has worked on a previous occasion. That's 3 pretty decent reasons to think we can get a bounce from here. So let's see if we can. WTI crude oil, so we're breaking out to the top side finally. We were saying about it last week. If you remember, on the daily chart I pointed out this declining trend line. At that stage, if I zoom in a bit, we were up here through these peaks, and I was saying it was looking pretty good. I think we dipped down to 40 again, and I was saying it looks like, yeah, we're moving up to the top side now. And we've done so. We're up through 45, and so this looks positive. We basically want to be holding on to these old highs for the uptrend to continue. If the old highs give way, it's not completely game over. I would still tend bullish while we're above 40. If we drop below 40, I think that's a false breakout and potentially much lower prices. Keep in mind that it's the OPEC meeting both Monday, Tuesday this week. So let's see what OPEC come up with. The general consensus is that they will delay agreeing to produce 2 million barrels more oil per day. Obviously more supply in the market would be negative for the price. So if they delay adding that extra supply, that should be positive for the price, all else being equal. So if OPEC do come to that decision in the end, then that's positive, and we've seen a breakout to the top side, which is also positive. So to reiterate, we're looking for firstly 44 to hold. That's the old highs. We could drop down to this little intraday high 43, and worst case scenario down to 40, but 44 is really what wants to hold. That's these highs through here. 43, maybe it flushes down a little bit in OPEC volatility. These would be dips that would be good to be able to buy into were they to occur in line with the kind of trend that we've been working with. Now let's just jump over to Bitcoin, and this is just a little moment, everyone, if you don't mind. I'll just patting myself on the back here. This is just a bit of a back patting scenario that you're witnessing. These lines I've not moved from last week, and if you remember, and this is where this line finished last week. We got a move up. We challenged exactly the highs that I had on the chart, basically from the old record high. I had that as the resistance on the chart. I mean, literally my chart from last week was like mapping exactly where the price was heading. So this was the trend line where I basically said, this is how the trend, we had a bit of a kind of mismatch here, but this is generally defining the short-term trend. And I said this, how best to show this? No, that's probably this. This is a kind of looser, longer term trend should this shorter term trend give way. And so if you extend this trend line up, you can see that pretty much the next low happens through there, and then we break out through there, and that's where we see that furious sell-off. We come back down to the kind of the other line that I had on the chart, and almost perfectly this rising trend line, which has 3 tests on it, and we're stabilizing at the moment, and we're back up through 16,850, Oh, no, sorry. We were above 18,650 over the weekend, and through Sunday, as trading picked up again, we've retested highs at 18,500. So nailed this pretty well. Overall, guys, I mean, it's a pretty strong uptrend. It was natural that we'd see a sell-off from the old record high. This area that we basically stabilized at was where we retested in the old sell-off. So, but remember how big the weekly sell-off was from the old high last time. It dropped from over almost 2,000 down through to almost got cut in half, down to 11,000 and change from 20,000. That was the extent of the sell-off last time. Not seen anything like that last week. It was a pretty vicious sell-off, but so far it's just a pullback naturally in an uptrend. And so I think there's still a lot of I wouldn't exactly say there's fundamentals backing this up, but there's still a lot of enthusiasm out there. So maybe still opportunities to be had while this trend is still up. Let's just use this rising trend line as our basis. That's what we did last week. It worked out pretty well for us. Let's maybe assume that we get some kind of consolidation above 16,850, so we don't have to rush in and buy in the current area. But let's stay bullish while we're above this rising trend line. This trend line we can probably drop for now. and just take it like it is. We've had a decent pullback from record highs, as you'd expect, but it's not nearly as bad as we had in 2018, where it dropped almost in half in 1 week. It was a drop of about 12% on one day, I believe. On Friday it was pretty hardcore, the extent of the sell-off, but we've bounced back with a bit of strength here. So probably going to be a bit of back and forth between the believers and the naysayers, and but I think there's actually a decent chance we break out to record highs here. And last but not least, the S&P 500. Again, another chart that hasn't changed a whole lot. And again, just the temptation, the absolute temptation. Even though you read the CNBC articles, you read the Bloomberg articles, and you think record highs, record highs, record highs. But this rising trend line that I've had on my chart for several weeks now, it's just working. It's just working. And it's just very tempting to go against what has been such a strong trend and think maybe the risk to reward to the downside is just getting a little bit more tempting, because it just can't get through this line. If it could get through this line, I'd feel a lot more encouraged. But look at that sell off there, and maybe what we've been witnessing over the last week or so since that is some smart money offloading before a big drop. But let's see. The trend is still up. But if you're mindful of it, if you're aware of the risks of going short the stock market, which is in a furious bull market, the risk reward up here is a little bit tempting to anticipate some other kind of unexpected event which could go against the consensus and see a bit of a drop. Okay. So let's meet again next week, and we can talk about whether we've started a Santa rally or not in the month of December. Until then, good luck trading. Thank you very much for attending, everyone. Good luck this week, and of course, if you're enjoying these videos, may I just remind you to please subscribe to the channel, and you can make sure you don't miss the next one. Thank you.